Hello everybody and welcome back. In today's video, we discuss everything to do with the stock, commodity, and crypto markets right now, including the key levels that you need to be watching over the next 24 hours and coming weeks. Well, the Federal Reserve has done it. They've raised rates in the US for the first time in a long time. We've got some support coming in on the markets in terms of new stimulus. And of course, in China, we've got even more support with the government vowing to stop the crackdown on tech, leading to some incredible runs. Why are they doing it? Where is it going next? Stay tuned as we uncover all of these things. See you soon. Well, let's get into it. Yes, it was a massive day of news. This is our daily show here covering stocks, cryptos, and commodities. And of course, it's for the 16th of March, 2022 in terms of the close. Well, first off, let's talk about Papa Powell. Let's talk about Jerome and what he had to say about raising rates in America for the first time and also recession risk. And I'll bring here the recession risk question. He said it's not particularly elevated. I'm going to show you some charts today that are showing that actually it is elevated and we are in a point that is very, very, very close to peril if things go wrong. If you scroll through and you really read these articles, basically the main thing is that markets initially didn't like it, and then of course they went straight back up on all of the general discussions that the Fed was talking about. The Fed obviously got inflation badly wrong, and now they're admitting one thing. There's no quick fix to this. In fact, they actually say that the Fed doesn't expect the US inflation to subside to pre-pandemic levels for several years. So they're saying that they believe inflation is going to be here for a long time and not stopping anytime soon. So what are they going to do about this? Well, the street now expects 7 rate hikes in 2022. Yeah, that's gone up. Instead of 6 or 5, it's now 7 rate hikes. So this is actually getting closer to Jamie Dimon's call for 2022. Now, will it happen? The Fed tend to be quite far behind, but that is just what is being expected in these markets. You might think, well, how are these markets going up? And this is where the shenanigans begin in many ways. But let's just quickly look at the other thing that was the biggest news of the last 24 hours. In the previous video, I talked about the Chinese economy collapsing in terms of the stock market. They obviously were looking at their stock market as well. And only a few hours after, they made an announcement that they would ease the crackdowns on many of the big tech stocks, and they were going to support the market. Now, we don't have much clarity on this necessarily, but this led to massive, massive buys. Remember, many of the Chinese stocks, especially the tech stocks, the big ones, are trading at a very low multiple for their businesses. So it went upwards of much as 25 to 35% in the next 24 hours. And is this a bottom that is now in these markets? Well, we'll talk about that soon, but it very, very well could be. Let's take a look at the US market, the biggest market in the world, and see what was happening. It was all about risk on. So this is now 2 days of risk on that we've had in the markets. And we talked about it previously. It was really this that was shining. Microsoft, Apple, Google, Amazon, Tesla, Nvidia, all of the big semiconductors, all of the big tech. That's where all the money was flowing into, and it was very, very strong into these markets. If you think about the Nasdaq for the day, here's where the announcement happened. It wiped it all off. And if you were day trading around the announcement and you took into consideration some of the key support levels that were coming down, you had a great back end to the session. I wish I could have been there with you. It was a very easy trade if you could have seen it. And I'm sure many of you did get that. If you got the trade, let me know in the comments down below. It bounced straight off so many good supports. We'll take a look at those later. But anyway, the Nasdaq ended up 3.7%. The Dow Jones up 1.55%. And IWM, the small caps, up 3.15% on the day. Let's move over to the sectors that were doing best. It was the clean energy, it was TAN, it was some of the sectors we've spoken about recently, semiconductors, technology, and it certainly wasn't the other sectors. All of the more defensive ones that we've seen rotation into recently were not doing so well. So why is this happening? Well, we'll get into that in a few moments, but I did just want to bring up a chart that we brought in yesterday talking about some of the biggest 48 days of terms of bad trading performance from 1928 to 2022 and what ends up happening at the year end. The thing about these markets is that even though we say the Fed's gone from the market, they still to a degree are supporting markets, and so is of course the government, and they can't really stop at some point. So statistically, anywhere when you're getting these kind of 15%, 20% downs in the market itself, is usually a good time for investors being traded compared to traders, to potentially get into these markets. Some of the ones that you might want to focus on, we've been talking about stock split performance. Of course, Amazon and Google having great 2-day sessions. Why? Because I think a lot of people are trying to take advantage of what has historically been even over performance and still a relatively cheap price. So remember that when you're looking at these markets. So we talked before about how the Fed might have it completely wrong, and they actually tend to have it completely wrong in these markets. Let's look at what the actual traders are telling us. Let's look at what the investors are telling us. And one of the things is the canary in the coal mine indicators in terms of yield inversion. Now we've already got 30-year yield inversion. We don't have the big one, which is 2 to 10 year, the most accurate one. But if we go over to the 5 and 10 year, look at this, it's actually inverted. So it inverted yesterday, and it's another warning sign of bad things to come eventually in the US economy. And I think this is what is really worrying so many people. If you think back and have a look at these signals, they hit in 06, they hit in 18 and 19. Obviously, it led to that massive wipe off. And they also hit somewhere around here, which was 98, and then of course 2000. And you think about yield inversion back here in 89, 87, all of these times, it's just really bad that when this occurs, it tends to be a bit of a signal that yes, we might rally in markets. Yes, it might be a good time to get into positions, but the light, like I guess you would say the light in terms of the end of these markets may not be so good. Unfortunately, they are usually around 12 to 18 months, if not even 24 months early on recessions. But if the 2-year, 10-year inverts as well, yeah, it's one of my leading indicators showing us that, you know what, things are not as good as you would expect. And that's often a time where people start to deleverage their positions and just really hold positions, if not make longer term hedge bets. Let's move over here to the PCC, the put call ratio, still sitting in the middle, not much going on there, unfortunately, in terms of what the market is telling us or anything else. And I wanted to bring in one indicator that I use, but I obviously use it a little bit differently. So you hear me talking about bond indicators, and you hear me talking about the bond market. This is LQD, investment grade corporate bonds. And why you look at something like this is the bond market tends to be a bit smarter, let's call it, than the stock market. The traders tend to have a bit of an idea of what's going on. They tend to be early. They tend to understand when the market is not so healthy. Now, I've got other indicators that I use, but here is just a good idea of if the rally is real or not. We've seen plenty of rallies. Think about that 24th of January. Was that a real rally? The bonds said no. And of course, while the market was going like this, the bonds were saying, oh, hold back there. That wasn't as good. And if you've never thought about the market this way, of course, you've got to give us a subscription because you have to start looking at bonds like this, guys. 2 days up. So pretty rare. And this isn't my main indicator, but it's certainly one that's a bit of a basic that some people can use. And we've had one other point where it was okay. And we've had one point here where it's starting to look okay. So these are the first 2 times where it started to really turn around, and the bond traders were saying, you know what? I'm actually okay with getting into this market. I'm okay with taking some risk. That's not to say that in 24 months or 12 months time, they're going to be okay with it. But for now, they are showing it. Before we move into maybe some of the individual stocks, let's just quickly talk about gold, oil, everything else here. So gold actually printed a bullish hammer in the last 24 hours. You can see here the daily bullish hammer. If it flows through above the 20 moving average and above this price, then I think that will be fairly strong for gold. And I think that'll be pretty strong, like little base. But let's have a look at it on the 2 hour here just to see whether it is doing the right things. The problem is it's a lot based on the Fed's kind of decision. You can see here the Fed's come out, it's crashed, and then it's just quickly rallied straight back up. Is this the type of trading environment you want to be here with gold? Well, I think some people will say, well, Tom, that looks like a Wyckoff on a 1 hour with the max pain. I think you could make cases for that. Something like this would be the way that I would really approach this market. And the main reason is because I'd be looking for that extra confirmation. We know that there's something going on about this 1910. We know there's support there, and we can see the resistance is also present. And I think it's really important. USOIL still hovering around the support. Of course, big sell-off here in USOIL. I would say it probably does something like this in the future and then kind of rallies down. It makes the most amount of sense. If you're looking at this being a base, Yeah, I think it is, but you need more technical analysis. Remember, double bottoms, some kind of holding pattern, something like that. If you're thinking about taking oil long, it's not really the time to do so just yet, at least in front of what the charts are. Let's get into some of the stocks. And if you're trading Tesla, you might have been very happy with yourself, because we did discuss the idea of it coming back down to the 800. It did so thanks to the Fed announcement, and that was a great rally point. You would have been a bit sad in the morning and you would have probably said, oh, damn, I missed it. Or if you did miss the first initial rally, you would have been a bit upset, but nice continuation, and it closes right on its highs. So what's next for something like Tesla? Well, let's take a look here. It closes directly on the daily 20 moving average. Now, for anyone that's been watching the channel for a while, you'll know we love the daily 20 moving average because it's been a very good short point. It still could be. I have a suspicion that the next trading day, as in the Thursday in the US, will actually be down in the US markets. The reason why is because this was two massive big bull days, and the sentiment is still going to be a little bit sell the rip. Now, where it's going from that point on, we'll have to really start to knuckle down on the markets themselves. But it kind of makes sense for a little bit of a decline here, followed by that potential of a rally. Remember, close above the daily 20 moving average, and especially above this 860 as well, would be a big deal here for Tesla. So we'll continue to watch that. But yes, the intraday was very interesting, and it's going to open at a point of resistance. So have a look at that on your charts, and of course, hopefully you can use your system to find some more clarity. Let's move over to Nvidia. Another strong day for Nvidia. You'll see the downward trend that we've used for so long, and we've talked about this. It's hit right on it. This is the daily 50, the blue line here, and it's got a little double bottom. I'm not really too, I guess, either way here on Nvidia. We all know it's a great company. I've been on the record talking about its price being pretty expensive. And of course, over here, I was really heavily into the idea of shorting it into this zone. Why? Because we had the tweezer top. We had that tweezer rejection. At this point, I'm a bit neutral on this chart. I think we've got to come back and see another day. So we'll do that, and we'll come back a little bit later. Now, we mentioned before the Chinese markets be getting support. Yes, it is. And wow, did they do it at the right time? It's almost like these central banks and governments look at technical levels and decide that the algorithms will get control, and they've got to put in plunge support. Some people would say that, oh, that's a conspiracy. I personally think it's about correct, because when you look at this, where did it come down to? It's plunged straight into the previous support lines here of 2019 and 2020. And this is the area where you expect, if it gets through there, it could be in free fall. What have they done? They've come out and said, you know what? We're going to stop the crackdown. We're going to allow these companies to do better business. And that led to a massive increase in price. Now, I still expect this is probably will start to drive down a little bit and then come back up. But when you see these types of things, especially a government intervening in the market, it does tend to be, and this is why algorithms have taken over so hard here, it does tend to be the lows in. So if you're liking these types of markets, if you see pullbacks like this, like some kind of lightning bolt, that would probably be a pretty decent signal. Remember, they're still heavily, well, way cheaper than they were in the past. Even if this rate here, where they got to and where they are now, is still 112% away. So with this kind of big move, you expect some kind of selling pressure to come back in on it. But if the government is supporting it, it'll be one that we have to watch from a TA perspective as well. Let's move over to IWM, one of the big US markets here. Obviously the small caps. We've talked about this many times. We haven't been able to get through the 190. We haven't been able to get through the 210. This is a trapped accumulation base, with volume also dropping off here a little bit. If the market's able to get through 210, I think we've got to expect this as a wider rally across all of the markets in the US. And at this stage, we're not seeing that just yet. Let's move over to the Dow. The Dow also had a pretty strong day, not as good as the others though. And it's ended on the weekly 50 moving average for now. And again, we would probably expect some selling pressure to come in here. It would make sense. Let's have a quick look at the 2-hour chart just to get a bit of an understanding of where some supports are. And you'll notice what happened with the Fed. And this is going to be an interesting zone, somewhere around this 33,500. Previous resistances, previous support, an interesting zone for sure in these markets. The Nasdaq's very similar. The Nasdaq managed to rally pretty much to the downward trend line. And we'll have a look here. You got that 14,000 level. It's what we suspected could occur. And it certainly did. 14,000 is hit. What's going to happen around the 14,000 level? You would expect sell the rippers to come back in. Basically, the bears are going to try to get control of the market here. Why? If they can't, it's one of their last stops. A break above 14,000 will be to 14,400. Why? Previous resistance, 50 moving average. So it's big now or never really for these bears to get back into the market. They've allowed 2 days of massive rips. We've got quadruple witching coming up on the Friday. We'll do a big bond overlay on the next video that we do before the Friday movements. And yeah, it would make sense quite a lot here for this level to be, I would say, respected in some way, at least initially. Let's have a look at the futures. This is what's happening right now. It's kind of just sitting right on it. So again, something that we'd be looking at. Let's now discuss the S&P 500 because it's probably even cleaner here. If the market did rally past this trend line and ever hits the 4,400, are we going to see resistance? You would think so. 50 moving average here on the daily, resistance in general, previous support, big level. The other thing is there's a big war zone here between the 4,300, and that is between the bulls and the bears. And why I mentioned it was such a good trading day after the Fed came out with their announcement was we ended up getting right down into that 4,300, 4,280 area, previous support, resistance, acting as support. And there was a good little buy-off zone in here, which you could have then extrapolated to whatever your favorite stock was, Tesla or anything else. So very strong movement. People will say that it's a double bottom. Absolutely, it was a double bottom. The double bottom's completion technically is 4,400. But there's a lot of very powerful concepts at work here. And what I'm really looking for is more of this. The base here, the resistance of 4,400. We've got tests again to that level. And if we get through the 4,400 here, that's when you start to think, okay, I think the bears have lost this challenge for now. This doesn't change the fact that we could be going into a long-term or some type of recession in the US. Obviously, we're seeing yields invert on the daily. The big one hasn't happened yet, and we'll be watching that. But it's a scary time to be in markets. There's no doubt. Like, this is not normal, and everything in markets always brings up challenges. So I think, like we've said before, 2022 is really the traders' year. It's up, down, and all around, and there's lots and lots of low clarity, I guess you would say, in terms of all these markets coming together. The bonds are currently agreeing with the stock market. That's good. The market itself is probably going to need to have a little bit of a sleeper based on its huge moves the last 2 days. And obviously, if you're a bear in this market, where you're really praying it goes to is probably underneath 4150, because if you're a bear and you get it underneath this zone, it's going to free fall and get very, very aggressive. And you would think the next stop is going to be 3,800 for the S&P 500. So there's a lot going on here. It's quadruple witching, lots of shenanigans. Some people prefer to stay out of these markets. I totally understand. But if you get past the 44, I still think that's going to be a bit of a rally zone. And in the next 24 hours, there could be a little bit of sell-off, especially on things such as the Nasdaq. Let's move over here to the crypto markets. It's really ping pong with two different zones. If you look at the weekly, you'll see rejections all over the place and plenty of rejections coming through. If we go to the daily, you'll notice that it's still struggling and holding just onto that 37,000. Each time it comes down here, that's a really key zone where you would expect it to probably short off. And here, the 44,000 or even the 42 or 41, you'll notice it's just currently making a series of lower highs. So we've discussed it several times. We think that if it gets past 45 to 46, then you've really got the bottom is in and the new kind of bull run happens for Bitcoin. But for now, it's just going bang, 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 and continuing to make lower highs. So watch the 37 if you're a bear. Underneath that, bit of a free fall. And if you're a bull, you're really watching to get a nice daily close above that 44,000 and then get through 46. Thanks so much for watching. If you have enjoyed the video, please remember to come and follow us over on Twitter as well at FX Evolution. We post up a whole bunch of different content there. And of course, subscribe, smash that like button. We'll see you in the next one. Bye for now.